Joining us now for more, Baird's Jonathan Komp and Rosenblatt's Bernie McTernan. Good morning, gentlemen. Jonathan, let me start with you. What do you make of these early moves this morning? As I mentioned, the stock was up nearly 12% in the pre-hours, and this wasn't one of these quarters where it wasn't good enough, the results, like we've seen from some of the other stay-at-home names. I mean, Peloton really blew expectations, even the highest expectations, out of the water here. Is this more indication that valuations in these stay-at-home stocks have become a little too frothy?
Yeah, it's a good question, Deidre. Thanks for having me. I think it's more a combination of a stock that's more than tripled year to date. Plus, really, as you highlighted, a blowout quarter when you look at the combination of the results, more than doubling the subscriber base, reporting roughly twice the EBITDA profitability than what was expected by the street. Plus a very bullish outlook, frankly, more than doubling revenue growth expected again for the year ahead, planning to expand profitability further. I think more importantly, showing confirmation of expanding engagement, signs that they can successfully grow the addressable market, which we'll hear more of next week, and then also pulling forward on the profitability. And we think those three factors really support the investment thesis here.
Hey, Bernie, you just heard from CEO John Foley, and he says that their software, hardware enables them to succeed in a post-COVID world. Do you agree with that? And does that come at the expense of gyms, brick and mortar gyms?
Yeah, so we wholeheartedly agree that the way that people work out is fundamentally changing, and COVID is really driving an acceleration to what is a better user experience. It's a high-quality user experience that's cheaper and is also more convenient. So we think that over time, especially as gyms reopen, Peloton's still going to be able to drive engagement in users. In addition, what we're looking to is that because of the focus on affordability, Peloton and other home fitness will also be used as a complement to a gym membership instead of just a turnkey solution like it is right now.
Bernie, what do you think right now the market valuation assumes in terms of subscriber growth down the road? I know you have a 2030 target, right, for number of subscribers through Peloton. I mean, is that where the market's looking toward it already?
Well, really, I think the big thing that the market is looking at is the mix shift of revenue that's going on. So we're going from mostly products to mostly subscription over time. And since subscription is recurring and higher margin, that's going to inflate the multiple along with it. So we look at the company on the sum of the parts basis. We put 1 times revenue on the product side and 25 times on the subscription side, looking at software comps. But the key thing, too, is that in what we mentioned earlier with the SAM, the serviceable addressable market, they called out 13 million at the time of the IPO. We're going to get an update on that next week, and that could be 40, 50, maybe even 60 million. So our 11 million estimate for 2030 connected fitness subscribers is probably going to look increasingly conservative this time next week.